Welcome to Spiedel's California Minute. I'm your host, Catherine Zidane. This week we're covering some tips regarding the pass-through entity tax. We cover this topic regularly in Spiedel's California Tax Letter, a monthly newsletter that will ensure both you and your clients are up to date with California tax law changes. You can get subscription details and download a sample issue at caltax.com under Publications. Also, as we do each year, this podcast will be on hiatus through tax season, and you'll be receiving the Tax Season Tribune, which is a short weekly newsletter that has lighter fare than our regular content. The podcast will resume for its 10th season on April 20th. With filing season and a new year starting, here are some considerations regarding the pass-through entity elective tax and corresponding credit. If the entity chooses to make the pass-through entity tax election, there are a variety of factors to weigh when determining how and when the election should be made and the tax paid. Consider whether it makes sense to make the election, especially if the owner anticipates that they will not be able to take all the available credits on their California return. Consider if the pass-through entity owner will be moving outside of California or anticipates a drop in income, because they may lose out on being able to take the credit. Another question is, will the owner be able to use up any credit carryovers? Consider the interplay with other credits, such as the other state tax credit. For S corporations in which only some of the shareholders consent to have the tax paid on their behalf, the IRS hasn't addressed whether the tax can be allocated only to those shareholders who consent and based only on their share of the tax actually paid. This also affects S corporations that have non-resident shareholders whose share of the tax is based only on their California source income. Also, regarding making timely payments, remember that late or underpayments of the June 15th prepayment will result in an inability to make the election for that taxable year. When the pass-through entity elective tax was first enacted, many tax professionals asked whether the corresponding credit could be treated as an estimated tax payment by the pass-through entity's owners. The FTB has been clear that the credit is not an estimated tax payment. However, it can be subtracted from the taxpayer's estimated tax liability in determining the amount of estimated taxes due. But because credits can't be applied against the mental health services tax, they cannot be subtracted from the mental health services tax liability when calculating the taxpayer's estimated taxes due. Unused amounts of credits originally claimed prior to January 1st, 2026 can be carried forward for 5 years even after the credit is expired. Carryovers are claimed on a first-in, first-out basis. However, a deceased taxpayer's unused credit cannot be claimed by the taxpayer's estate. Any of the taxpayer's credit carryover remaining after the taxpayer's final return is filed is lost. If a taxpayer erroneously applied pass-through entity tax payments to another tax owed by the entity, the FTB now has a process for transferring the misapplied payment so the taxpayer can avoid penalties. A request to move payments related to an estimate payment, LLC or S corporation tax, or LLC fee should be submitted in writing. The request needs to be signed by an officer or owner of the entity or a representative with a valid POA on file. The request also has to include acknowledgement that reapplying the payment to another liability could result in penalties and interest in the tax year where the payment was originally applied. These requests can be submitted securely through a MyFTB account. Tax professionals may also contact the tax practitioner hotline and speak with a representative to adjust the payment, but a written request is still required. Tax season is just beginning, but that doesn't mean it's too early to sign up for Spiedel's post-tax season update and review webinar happening in May. Get answers to all the questions that pop up during tax season, plus 8 hours of CPE. For details, go to caltax.com and click webinars. That's all for this week. Have a productive tax season, and Spiedel's California Minute will return on April 20th.